Intro: Following the Money in Washington. Welcome to PyUncut, your go-to source for real investing insights, financial storytelling, and market analysis. Today, we're diving deep into something most investors don't think about: how U.S. lawmakers themselves are trading AI-related stocks. Yup, you heard that right. While you and I are scrolling through financial news and waiting for the next Fed meeting, some members of Congress are actively buying into the AI boom. According to MarketBeat's Thomas Hughes, both Democrats and Republicans have been loading up on shares of companies that are at the forefront of artificial intelligence and automation. And what's fascinating? These trades often happen just before major announcements or rallies. So in this PyUncut episode, we'll break down the 5 AI-related companies that members of Congress are quietly buying, what these trades signal for retail investors, and whether following these moves could give you a real investing edge. Let's unpack it. Section 1. Congress's quiet summer of AI buying. Over the past 90 days, congressional trading data shows 5 lawmakers across both parties and both houses of Congress made notable purchases in AI-related companies. The message? AI is not just a tech trend, it's a political and economic force. These lawmakers aren't just dabbling, they're building meaningful positions in companies expected to benefit from AI's rise, from healthcare and finance to transportation and defense. Let's go one by one through these names. 1. UnitedHealth Group, NYSE UNH. AI meets healthcare. Let's start with a company you might not immediately associate with AI, UnitedHealth Group. On the surface, it's a healthcare insurance and services giant, but underneath, it's a data powerhouse. Why lawmakers are buying? UnitedHealth operates in a massively data-driven industry: medical records, diagnostics, billing, and customer service. AI helps the company analyze patient data, optimize costs, and improve care outcomes, all while expanding margins. According to MarketBeat's Thomas Hughes, several congressional members, Democrats and Republicans, have been bought the dip in UNH over recent months. Stock setup? UNH has been under pressure this year due to rising costs and margin compression. But members of Congress seem to believe this weakness is temporary. Analysts are also pointing to a bottom formation, meaning UNH could be near a reversal zone. Bottoming is a process, says Hughes. Some stocks rebound quickly, others take time. UnitedHealth looks like it's gaining traction. If lawmakers are right, UnitedHealth's AI-led efficiency could restore profitability and set up a strong end-of-the-year rally. Number 2. JPMorgan Chase, NYSE JPM, the first AI-powered bank. Next on the list, JPMorgan Chase. This is big. JPM recently outlined its plan to become the world's first fully AI-powered bank, integrating machine learning into nearly every aspect of its operations. What that means? AI will be used to analyze lending patterns, detect fraud, optimize customer offers, and automate risk management. In essence, JPMorgan wants to transform into a tech company that happens to be a bank. What Congress is doing? Over the summer, lawmakers from both parties, including one independent and one Democrat, notably Ro Khanna, made 7 purchases of JPM stock. These weren't random small buys. They were sizable and confident entries. Market context? JPM has been riding the high interest rate wave, benefiting from strong net interest income. As rates eventually cool, AI could help offset margin compression through operational efficiencies and data-driven growth. The bank stock is already trending higher, and with AI tailwinds and a soft landing on the horizon, investors could see sustained upside. We're shifting from a high interest rate, good JPM environment to a strong economy, good JPM environment, Hughes notes. That's a powerful signal. Number 3. Uber Technologies, NYSE Uber, beyond ride-sharing. Now here's where things get futuristic. Uber isn't just your ride-hailing app anymore. It's becoming a platform for autonomous mobility, from self-driving cars to AI-powered air taxis. Why Uber is on the congressional radar? Lawmakers across both parties, 4 members, 6 purchases, have been adding Uber stock over the quarter. Uber's core business is showing strong cash flow and profitability, but it's the AI-driven automation story that's catching attention. AI in motion, Uber is investing heavily in self-driving vehicles, robotaxis, autonomous delivery networks, and air taxi partnerships, some of even involving government participation. That's not science fiction anymore. It's active development. The financial angle? Uber is buying back shares, reducing float and increasing earnings leverage. Institutional investors and analysts have been raising price targets, signaling conviction. Congress buying in reinforces that sentiment. Uber is building out its platform to connect riders to whatever kind of ride-sharing service there is, even automated air taxis, Hughes says. So the next time your Uber shows up, it might just be a pilotless drone, and lawmakers are already betting on that. Number 4. Advanced Micro Devices, NASDAQ AMD, the AI chip challenger. Now, of course, no AI investing list is complete without semiconductors, the heart of all AI systems. And Congress knows it. Members have been buying AMD, a company long seen as NVIDIA's main rival in the GPU and data center race. Why the timing matters? Lawmakers made their AMD purchases in August and September, right before AMD announced a billion-dollar deal with OpenAI. That partnership, valued in the tens of billion dollars, sent the stock soaring 30% in one day. What's next? AMD's next-gen MI450 chip line is expected to reclaim major market share from NVIDIA. Analysts predict triple-digit growth in the AI data center segment. Congress's early buying suggests they saw the setup before the spike. These trades affirm what we've been saying all along. AMD is well-positioned for the data center boom, says Hughes. If AMD captures even a fraction of the AI demand surplus that NVIDIA can't meet, its stock could double or even triple within 12 to 18 months. Number 5. Palantir Technologies, NYSE PLTR, the AI defense powerhouse. And finally, the 5th name, and perhaps the most politically connected of them all, Palantir. This one is not new to the congressional buy list. Lawmakers have been accumulating Palantir for over 2 years. Why it's a favorite in Washington? Palantir builds AI systems for government and defense, everything from counterterrorism analytics to battlefield logistics. It's now expanding rapidly into the private sector, providing data intelligence tools for corporations. Its role in national security, intelligence, and next-gen defense tech makes it a long-term bet for those who understand federal budgets. The trend? Recent data shows 5 purchases by 3 members of Congress, again from both sides of the aisle. That bipartisan interest is rare, and it tells you how entrenched Palantir have become to U.S. infrastructure and defense operations. It means the company is entrenched. It's not going anywhere, says Hughes. The big picture? Palantir is expected to benefit from increased government spending on AI and defense automation over the next year. With its expanding role in AI defense, intelligence, and security analytics, PLTR could see accelerating revenue growth and multiple tailwinds combining into what Hughes calls a positive feedback loop.
Section 2. What these congressional trades tell us. So what does it all mean for you, the retail investor? Number 1. Bipartisan confidence in AI. When both parties, Democrats and Republicans, start buying into the same trend, you know it's not just political. It's economic inevitability. Number 2. Institutional validation. Every company on this list, from UnitedHealth to Palantir, has also seen increased analyst upgrades and institutional buying. Congressional trading simply reinforces that sentiment. Number 3. AI equals long-term structural growth. These aren't short-term trades. They're positioning moves, bets that AI integration will redefine traditional industries like banking, healthcare, and transportation. Number 4. Timing still matters. Remember, even if members of Congress have good timing, markets move in cycles. Buying dips in strong, long-term themes like AI is a smart strategy, but patience is key. Section 3. The ethics and transparency question. Now, you might be wondering, should Congress even be allowed to trade individual stocks? That's a fair question. There's a growing public debate over insider access, given that lawmakers often have visibility into upcoming legislation or contracts that could affect companies like Palantir, AMD, or UnitedHealth. But regardless of the ethical debate, the data is public, and for investors like us, it's a useful signal to track. Platforms like MarketBeat's Congressional Trading Tracker allow you to see who bought what, when they bought it, and how those trades performed afterwards. Following that money trail doesn't mean copying every move, but it can help confirm broader market sentiment around major themes like AI. Section 4. PyUncut Takeaways. Let's wrap this up with the key takeaways from today's episode. The 5 stocks Congress is buying. Company, sector, AI role, why it matters. UnitedHealth, NH, healthcare. AI and diagnostics cost control. Margin recovery, patient data optimization. JPM, finance. AI-powered banking. Efficiency, fraud detection, growth resilience. Uber, mobility. Self-driving air taxi tech. Platform expansion, automation. AMD, semiconductors. AI chips and data centers. Huge growth potential, OpenAI partnership. Palantir, defense and analytics. Government AI and data intelligence. National security contracts, recurring revenue. Final thoughts. Follow the money, but think independently. Congressional trades shouldn't be your only signal, but they can be a confirmation indicator. When those who help shape national budgets are quietly buying stocks tied to AI infrastructure, data analytics, and automation, it's worth paying attention. Because this isn't just about hype, it's about where the next decade of capital investment is heading. And if history is any guide, those who spot these structural trends early and invest with patience and discipline often come out ahead. So whether you're watching Palantir's defense analytics, Uber's autonomous future, or AMD's chip dominance, keep your eyes on what Congress is buying and why. Because in investing, sometimes the smartest trade is simply to follow the money wisely. Thanks for tuning in to PyUncut, your weekly pulse on finance, markets, and AI investing. If you found this useful, subscribe to our YouTube channel for weekly insights. Visit PyUncut.com for downloadable infographics and reports. And drop a comment. Do you follow congressional trades? Which AI stock do you think has the most upside? And as always, invest smart, stay curious, and keep learning. This is PyUncut signing off.